Okay, we're gonna go over 16 today. The first thing we're gonna do is go through the additional information. Number 19 is your assignment that's due tonight. That is graded. There is another one on Vanco that I will open that if you want to practice, it's number 14. And it has the answers. As I have told you in the past, any of the non-graded assignments that you want to practice and have me look at, I will be glad to do so. There are a few in here, 19 and 20 are going to be the ones that are graded. There are a few other ones if you want to practice. So we're going to go to share my screen. Okay. And so we're going to start with this. So all I did was copy over the stuff from the other one that we were doing, and we'll fill this in as we go. All right, questions before I start? Okay. So this one, they borrowed money. And they borrowed $1 million. And the interest rate this time is 12%. And they borrowed it on July 1st. Okay, so what are we doing here? Come on. Maybe pull teeth.
So it has an annual interest rate of 12%, but we got it in July 1st, so we only have it for half a year. So we
Okay.
would calculate it for what's it? $1 million times 0.5 times 0.12.
Okay, so times 0.5 times 6/12, whatever you guys want to do as far as time goes. And we get 60,000. And remember, you can have interest expense, you can have interest income. So just make sure you know which one is which. So in this case, this is the expense. So I'm just going to drag it down to the expense box. All right.
I got it.
Go ahead.
For the test, are we gonna have to fill in like the left side where it says borrowed interest times simple interest, or we just gotta fill in first?
You're just going to do an income statement. This is the stuff that you would do ahead of time. I don't care where you do it. I'm not going to require it. So this would just be like your work paper.
Oh, okay. Thank you.
Only reason I'm doing this is so you can see it.
Gotcha.
All right, so let's go do cost of goods sold. So we have a beginning inventory of what?
I believe beginning inventory of 7,000.
Okay. And ending inventory was?
5,000.
Okay. And then we had employee meals.
Those would have totaled to 4,000.
Yeah.
Together.
Okay. So now what you need to do is go in your list and find your purchases. What are our food purchases?
Food purchases were 200,000.
Yep. Okay, so that's going to give us Thought I had formulas in here. Okay, so that's our cost of food used, but we want cost of food sold. And so we're gonna take our food used. We don't have any transfers, but we do have employee meals. And so that's gonna be our cost of food sold. Questions? Standard, pretty much the same every single time. Yeah. Go ahead,
just-
Jeff.
Yeah, for the transfers, other department, I assume that's transfers. Where would we find that if it is included?
It would be in your additional information right along with the beginning and ending inventories.
Okay, and would
It
that,
would be obvious.
okay,
And to be very honest, you're not gonna see any of these problems.
thank you.
All right, questions on cost of food sold? All right, let's go down here and do-
Sorry, one quick
Yeah.
question.
Go ahead.
I've seen as reading through some of the stuff, there's been like transfers from bar to kitchen. Would that be a positive or,
Yes, it could go either way.
okay, so I just wanted to make sure of that. So if it's into the kitchen, it would be a positive to the transfers. But if it's
Correct.
out of the kitchen, it would be negative. Okay,
Yep,
thank you.
sure. All right, so let's go to payroll. Our payroll is 30% and it excludes the food. So go find the wages. What do we have?
300,000.
Okay. Okay, what about food?
200,000.
Okay, A and G.
120,000.
And I think that's it for payroll, right?
Yeah.
Okay, so then the benefits are 30%. And that percentage will change, so don't presume it's always 30%. Make sure you read. Okay. This one excluded the food. So what that means is now I gotta go back up here and look at this. This never changes. Included, excluded, this doesn't change, okay? So don't change it. What changes is down here. The last problem that I showed you, the food was included in the 30%. This one, the food is excluded. So it's an additional benefit that I need to add to my payroll cost. So now you need to go see who got the food and how much. So who got the $1,000 worth of food?
$1,000 worth of food went towards to the food room employees, I
Yep.
believe.
Do them in the same order that they give them to you, listed. And then rooms got 3,000, right?
Yes.
And do you see how that's increasing your total payroll? So this is your payroll cost. Remember, this is your payroll cost. So it's gonna be the benefits, and then the food is just gonna depend on if this includes it or excludes it. Okay, questions? Okay, number 3 or 4 is 30% income tax, can't do. Number 5 is our management fee, can't do. But number 6, we have an investment in stock that costs 10,000. We We sold it for 8. So what do we have?
2,000
$2,000 in a gain or a loss?
loss.
Is everybody okay with that? It's worth, it cost us 10 and we only sold it for 8. Okay, so this one's good. I like this one. All right. So this one is a computer. It cost 15. Oops. Now this one, they don't give us the book value. We have to find it. So remember, book value is cost minus accumulated depreciation. That's going to give us our book value. Okay, cost minus accumulated depreciation is book value. Make sure you're okay with that, because when we start doing cash flows, we're going to get tons of those. And I got to know what they are. All right, it was sold for 2. And so now what do we have? If it's worth 3 and I sold it for 2, what do I have?
1.
You have a loss of 1,000.
Correct. Okay, that is all the additional information. Questions? Okay. Then I'm gonna go, let me take off all my numbers. Oh, hang on a second. I got it protected. I gotta go unprotect. Okay. So I'm cheating with my formula, so I don't have to type all this stuff in. All right, so let's go to rooms. We need to start with the revenue. What you got for rooms? What's your room revenue?
1.2 million.
Okay. So they give you room sales of 1,210,000, but what do they also tell you? What's also in there on the top of page 135, halfway down the list?
Allowances.
There's an allowance for rooms. I said, when you're looking at this list, the first thing I recommend you do is go see if there is one. Because if you don't, you're going to have to go back and redo the whole thing. No cost of goods sold for rooms. Payroll expenses. So let's go back over here. You can still see these back and forth, right?
Yeah.
Okay. I think if I stay in the spreadsheet, I think it's okay. So what I want to do is I want to pick up this number right here. This is my total payroll for rooms. Put that in. Okay, what were the other expenses for rooms? Look in your list. Come on, you're supposed to have this done.
50,000.
50,000. Okay.
Another 50,000? Or am I looking at that wrong?
What are you talking about?
Two of them. Oh, no, never mind. First one was, I was looking at heat, light, and power, and I was putting that under room. Never mind. It's my fault.
Okay, that's fine. All right. Everybody okay with rooms? Let's go to food. What's our sales for food?
Food sales was 450,000.
Okay, so our cost of goods sold, we're gonna go back here. We're gonna pick up this number right here. This is why you do all that additional information first. Makes doing the actual spreadsheet much easier. Okay, payroll again, we calculated over here. So we're gonna go pick up this. Okay, and what about other expenses? We can already see we're in trouble, right? Haven't even put in our other expenses and we're already in the hole. So what were your other expenses for food?
40,000 for supplies and other for the food department.
Okay, and so look at what we have. So the first thing you go look at, my food costs. I'm gonna divide it by my room revenue, or food revenue, sorry, 44%. So again, it's kind of like the one that we looked at the other day. Cost of food is too high, way too high, or they're not charging enough for their revenues. Okay, we're like over 10% more than we should be with our food costs. And that's the kind of stuff you would look at. All right, questions on that top section. We had no other revenues with this one. There was no interest income. There's nothing else that has revenue. Nothing else that has revenue. Okay, we're good. I'm gonna keep going. If you have questions, you better be asking. Okay, the middle section, always the same 5 in that order. A and G is always gonna have payroll. That payroll is always gonna have benefits. They may or may not get food. Sometimes they do, sometimes they don't. Just go with what you have. So we're gonna go get our payroll for A and G. Okay, what other expenses do we have for A and G?
We have an A&G of other expenses for 60,000.
Yep. Okay, and the other thing is here, remember in this middle section, it's only expenses. So what is ever in those columns needs to be added. And there better not be anything here. Okay, there better not be anything here. Said once in a while you might see something here if they split that out from the other expenses, but there's no revenue involved. It's just that there's a cost. Back in the old days, before you guys were even born, before cell phones didn't exist, which you guys, I'm sure, cannot imagine a world without cell phones. When you went places, you had to pay for long distance phone calls. So if you stayed at a hotel and you needed to make one, you would be charged. And so it was a source of revenue for the properties. Because they didn't furnish, and you didn't have all the stuff that there is today with all the internet, et cetera, wireless communications, blah, blah, blah. I say that's back before cell phones, which I'm sure you guys don't remember. Okay,
One of us does.
one of us does. How did we survive without a cell phone?
It was a pleasant life in many ways.
Well, my children get mad at me because I don't carry mine with me. It's usually sitting someplace.
But I worked at one hotel, just a brief sidebar, that long distance telephone used to be hundreds of thousands of dollars a month because we were in California with a large Asian contingency,
Oh.
and those long distance calls could be hundreds of dollars a call.
Yep. So it was a nice revenue stream
That no longer exists.
that no longer exists. All right. What are we? Information and telecommunications. What do we have here?
30,000.
Okay, and it's just a contract, right?
Mhm.
Okay. Sales and marketing, what do we have?
$50,000.
Okay, so we've got advertising for 50,000, right? Is there anything else?
And information and actually, wait, my,
Okay, what else goes under marketing? Sales and marketing,
Franchise fee.
the franchise fee. Okay, watch for that. Again, not always there. But as I told you, when you're doing these, honestly, check off the numbers once you use them. So once you do the payroll stuff, check off those numbers. Once you get everything else in there, check off those numbers because you want to make sure you don't forget anything. So this is going to be the 50 plus the 20. All right, what about maintenance? What do we have with this one?
40,000.
40,000, and it's just a contract. Again, sometimes we employ our own people. Sometimes we just hire an outside firm. All right, what about utilities?
there would be a 50,000, I believe. Yeah,
Okay.
50,000 for heat, light, and power, and
Okay.
20,000 for water.
Okay, right. So the two of those added together. So heat, light, power, water, those are the things you want to look for. All right, then what we're going to do is we're going to total the middle section. Again, remember they're expenses. So what you have in these two columns better equal what's in this one. You're going to total the top and the middle together. These are all double underlined because after this, everything goes in this right-hand column. And yes, it's all about the format. Okay. So how did I
I
get
think you
this?
need to adjust the calculation in E13. That should be 270. Shouldn't it?
Hold on,
60,
let me do it.
30,
Let me do it this
70,
way.
40,
Yep.
70.
If I did it with the right formula, it would have been fine. All right. So how did I get to 82? What do you have to do to get that?
the total operated department 708 minus the undistributed operating expenses of the 426.
Okay, so that number here is the result of the first two sections. So it's your revenue from up here minus the additional expenses. And so this is our gross operating profit. We can now go figure out what our management fee is. So we have to go back and see what they're using to find it. And remember, like this is going to be a little different than the last one. So let's go back over here so I can work. So this management fee is 2% of net room sales. What were your net room sales? Look on the thing we just did. What are your net room sales? What are net room sales? It's right here, right? Okay,
Net room
that's our net room sales. So it's 2% of that.
You're looking at 24,000.
Okay. The other piece of it is 10% of the number that we just found, which is that. And that didn't work. So we're going to go back over here and get that number. Forget it. Let's type it in. No, let's go there and put my equal sign. Okay. So I got 24,000 based on room sales, 2% of room sales. And then we have 10% of our gross operating profit. So we have a total of 52,200. Again, just do what they tell you to do with that because it's going to be different every time. So we're going to take that number over here. And subtract that off, which it didn't do. Okay, now what? Rent, property tax, and insurance. Again, if you want to list those separately, go ahead. I usually just stick them on one line, presuming I'm going to have a schedule. So what do we have?
You have 10,000 for rent expense, 40,000 for property taxes.
Okay. And
Interest expense.
interest.
Interest.
So I have rent of 10, right? And we have property taxes of 40. What do I always tell you you're always going to have?
Depreciation.
No, very first number on the list.
Fire insurance.
Insurance. Okay. Say you may not always have rent. You may not always have property taxes. It depends on if you own or you rent. But you're always going to have insurance. Okay, you're always going to have insurance. Okay.
Are we likely to see multiple entries for insurance?
No. But there are some problems where you have to actually calculate it like we did with adjusting entries.
Gotcha.
In the real world, absolutely. Depending on how much detail they want on their individual schedules as far as the different types of insurance. But on the summary sheet, no, because we would just be bringing the numbers from the individual schedules. Okay, do we have any other income? Did we have anything here?
For
What goes in other income?
It had the loss from the stock and the loss from the computer that we calculated before.
Okay, so the other income can also be a loss. So it's this 2,000 loss, this 1,000 loss. And when you're doing these, I don't care if you combine them, if you separate them out. I don't care how you want to do that there. But for this one, we're just going to do a loss. Okay. All right, what's next? What goes here? What goes here? Come on, I'm even showing it to you.
Oh, I forget I was muted. The depreciation.
Yes, and how much is our depreciation?
80,000.
Yep. Okay. Now, did we have any interest expense? We did, right?
yes, yes.
Calculated it right here, correct?
Mhm.
Okay, and our income tax is 30%, so that works. And then you're gonna take this number right here, and you're gonna multiply it by 30%, which is that. Gives us our net income.
I'm sorry, what do you multiply by 30%?
This is the smallest number possible, so it's the 16,800.
Okay.
Get all your expenses subtracted off, then you're gonna calculate your tax. All right, questions. Make it a little bit smaller. We'll see though. All right, here's what I want you to do. Okay, I'm gonna put you to work. So this is the only help you're gonna get on your homework. So go to number 19, which is on page 130, pretty much 137. It's probably the only one in the chapter that's all on one page. Go do your additional information. I will give you 10 minutes. And then we'll go over the additional information real quick. All right.
Mhm.
So get to work. If you have questions, ask. I'm not going anywhere. I'll be right here. All right, can everybody see my screen?
Yes.
Okay,
Yep.
let's go through
Yeah.
this so we get through it. All right. So the first one was they invested. So this isn't borrowed, this is invested. So this is going to be what kind of interest? Interest what? They invest it, they're
Income.
earning interest, income. Okay. So they invested 100,000 at 8% on April 1st. Okay, so what are we gonna do? 100,000, right? Times
Times 0.8.
0.08, be careful with that.
0.08. Okay.
Okay, and then times what?
And then times. Sorry, it's too early anymore. I'm trying to figure out how many months it is for.
It's okay.
9/12.
There it
Use your
is.
fingers. Yes, 9/12.
9.
This is when you're allowed to use your fingers. I don't think it's probably going to do that with a comma. Okay, $6,000. And remember, that's interest income. So where's it going to go? Where's it going to go on your income statement?
Non-operating income and
Simple
expense.
interest.
Up on the top part, right? Under income. Okay, what's your beginning inventory?
4,000.
Purchases?
Sorry, going back, shouldn't it be 9 months?
Didn't I
Being,
do-
starting at April 1st?
Didn't I do 9 months? I did.
Oh, okay, sorry, I thought the 8 confused me, because
Oh.
that's the interest rate. Okay.
Okay, what were your purchases?
I'm sorry, the cost of food sold was 50,000.
Wait a minute. So look, cost, beginning hang on a second. Beginning inventory is 4,000, right? What are your
Yeah.
purchases?
80,000.
80,000. And your ending inventory was
6,000.
6,000.
okay. And then what? We have employee meals, right? Total of what?
Nine.
Yep.
1,900.
Okay, so the cost of food sold of 76,100. All right, let's go do payroll. Rooms is what?
$100,000.
Okay, now this time the benefits are 25%. Sorry. So you're gonna go here. Okay, what about food? What was your
80,000.
80,000? Good. Okay, A&G.
$300,000. No, it's 40.
Yeah, okay, go down one.
Yeah.
Okay, now look at this one. You have a gift shop. And the gift shop has wages. You have marketing wages. Make sure you check through everything. So they all have to be paid. Oops. And they all get benefits. What is your gift shop wages? This is why I say make sure you go through and check off everything.
5,000.
5,000. Okay, they're gonna get benefits too. And then in this one, we also have a marketing department. What were their
About-
wages?
20,000.
Okay, now, this one excluded the food also. But not everybody gets food. So who got food? Rooms got food, right? How much did they get?
600.
600. Okay, who else got food?
Food. 1,000.
Okay, and who else got food?
And G for 300.
Okay. Nobody else got to eat. Okay, so that's all the additional information we can do. Because the other one is your income tax, which is 30%, and your management fee. This time your management fee is 5% of total sales and 8% of your gross profit. This is your homework assignment. Do it on Excel or write it out, do it on Word, I don't care, whatever is easiest for you to do. Are there any questions about this information?
What was the assignment? I'm sorry.
This is number 19.
Okay.
This is your assignment for tonight. It's due 1 minute before midnight on Vanco.
Okay.
One quick question. The
Yep.
interest income, because it's income and I would take a CD to be taxable, it would be up in the top part with the operated departments, right?
Right. It always
Or
goes
as
up there.
opposed to the
No.
bottom part of the other income, because
No,
it would
that-
impact the GOP and so forth. right?
Correct. All revenue goes on the top. Anything
Okay.
that comes from being in business, the gains and losses are just getting rid of some scrap. They don't really have anything to do with operating your business,
Okay.
which is where location. All right, guys. I'm gonna stop share, stop record.